Are you ready to break free from financial stress? Discover the 5 proven assets that will unlock your path to wealth and long-term security. Number 1. Bonds. Bonds are debt securities issued by governments, municipalities, and corporations. They are considered a lower-risk investment compared to stocks because they offer fixed income stream and have a predetermined maturity date. When you invest in bonds, you essentially lend money to the issuer in exchange for periodic interest payments and the return of your principal investment at maturity. The interest rate, known as the coupon rate, is determined at the time of issuance and remains fixed throughout the bond's life. Bonds can be categorized into various types, such as government bonds, municipal bonds, corporate bonds, and treasury bonds. Government bonds are considered the safest, as they are backed by the full faith and credit of the issuing government. Municipal bonds are issued by local governments and are often used to finance public projects. Corporate bonds are issued by companies to raise capital, and their risk level varies depending on the issuer's creditworthiness. One advantage of bonds is their income generation potential. The interest payments from bonds can provide a steady income stream, making them attractive for investors seeking stability and regular cash flow. This can be especially beneficial for retirees or those with a low risk tolerance. Another benefit of bonds is their relative stability compared to stocks. While bond prices can fluctuate, they tend to be less volatile than stock prices. This stability makes bonds an effective diversification tool, as they can help balance the risk in a portfolio that includes more volatile assets. However, it's important to note that bonds are not without risks. The most significant risk is interest rate risk, which refers to the possibility of the bond's value declining if interest rates rise. When interest rates go up, newly issued bonds offer higher coupon rates, making existing bonds with lower rates less attractive to investors. Additionally, bonds issued by entities with lower credit ratings carry a higher default risk, which can result in a loss of principal. To mitigate these risks, investors often diversify their bond holdings by investing in a mix of government, municipal, and corporate bonds with varying maturities. They may also consider bond funds or ETFs, which offer exposure to a diversified portfolio of bonds. In conclusion, bonds provide a predictable income stream and are considered a relatively safer asset class compared to stocks. They can be an attractive option for income-oriented investors seeking stability and diversification in their portfolios. However, it's crucial to understand the risks associated with bonds, such as interest rate risk and credit risk, and to carefully assess your investment objectives and risk tolerance before investing in bonds. Number 2. Precious metals. Precious metals have long been recognized as valuable assets that have intrinsic worth. Among the most popular precious metals are gold and silver, which have served as a store of value and medium of exchange for centuries. Investing in precious metals can offer several benefits to investors, including hedging against inflation and diversifying risk. One key advantage of precious metals is their ability to act as a hedge against inflation. In times of rising inflation, the value of paper currency can decline, eroding purchasing power. However, precious metals have historically maintained their value and even appreciated during periods of inflation. This makes them attractive to investors looking to protect their wealth from the erosive effects of inflation. Additionally, precious metals often exhibit a negative correlation with other asset classes, such as stocks and bonds. This means that when other investments experience volatility or decline in value, precious metals can serve as a diversification tool, potentially offsetting losses and providing stability to a portfolio. The inclusion of precious metals can help reduce overall portfolio risk and enhance long-term returns. Moreover, precious metals have a global demand and are recognized as a form of currency. They can be easily traded and converted into cash, providing liquidity to investors. This liquidity makes them accessible during times of economic uncertainty or financial market instability. However, it's important to note that investing in precious metals also carries certain risks. precious metals prices can be volatile and subject to market fluctuations. Factors such as global economic conditions, geopolitical events, and supply and demand dynamics can impact the value of precious metals. It's crucial for investors to conduct thorough research and consider the long-term perspective when investing in precious metal. There are several ways to invest in precious metals, including purchasing physical bullion, such as bars or coins, or investing in precious metal exchange-traded funds or mutual funds that hold a portfolio of precious metal assets. In conclusion, precious metals, such as gold and silver, offer investors the potential benefits of hedging against inflation and diversifying risk. Their historical value and global recognition make them attractive assets for wealth preservation. However, it's important to carefully consider the risks associated with investing in precious metals and conduct thorough research before making investment decisions. Number 3. Mutual funds. Mutual funds offer several advantages that make them a preferred investment option for many individuals. One key benefit is diversification. By pooling money from multiple investors, mutual funds can create a diversified portfolio of assets, such as stocks, bonds, and even alternative investments like real estate or commodities. This diversification helps reduce risk by spreading investments across different securities and sectors. Another advantage of mutual funds is professional management. Experienced fund managers oversee the fund's investment decisions, analyzing market trends, conducting research, and making investment choices on behalf of the investors. This relieves individual investors of the need to constantly monitor and manage their investments, making mutual funds a convenient option, especially for those with limited investment knowledge or time constraints. Furthermore, mutual funds offer accessibility and flexibility. They are available in various types and categories, catering to different investment objectives and risk preferences. Whether you're seeking growth, income, or a balanced approach, there is likely a mutual fund that aligns with your goals. Additionally, mutual funds offer liquidity, allowing investors to buy or sell their shares at the fund's net asset value at the end of each trading day. Cost effectiveness is another aspect to consider. Mutual funds often have relatively low investment minimums, allowing investors to start with small amounts. Additionally, by pooling assets, mutual funds can benefit from economies of scale, potentially resulting in lower management fees compared to investing individually in a diversified portfolio of securities. However, it's important to consider certain factors when investing in mutual funds. One key consideration is fees. Mutual funds charge expenses, such as management fees and operating expenses, which can vary across different funds. It's crucial to carefully review the fund's prospectus and understand the fees associated with the fund. Furthermore, while professional management is a benefit, it's important to evaluate the fund manager's track record, investment strategy, and overall performance. Past performance is not indicative of future results, but understanding the manager's approach and investment philosophy can help align your investment objectives with the fund's strategy. In conclusion, mutual funds provide investors with diversification, professional management, accessibility, and cost-effectiveness. They offer a hands-off approach to investing, making them suitable for beginners or individuals who prefer a more passive investment strategy. However, it's essential to carefully evaluate the fees, performance, and investment approach of the mutual fund before investing. By selecting the right mutual fund that aligns with your goals and risk tolerance, you can benefit from the potential returns and convenience that mutual funds offer. Number 4. Intellectual property. Intellectual property is a valuable asset class that encompasses patents, trademarks, copyrights, and other forms of creative and innovative works. If you have a unique idea, invention, or creative work, protecting it through intellectual property rights can provide you with several financial benefits. One of the primary advantages of intellectual property is the potential to generate ongoing income streams. For example, If you hold a patent for a groundbreaking invention, you can license it to companies for commercial use and receive royalties or licensing fees. This allows you to monetize your intellectual property and generate passive income over an extended period. Moreover, intellectual property can provide a competitive advantage and exclusivity in the marketplace. Trademarks can protect your brand identity, preventing others from using similar names or logos that may confuse consumers. Copyrights safeguard your creative works, such as books, music, films, and software, giving you control over their distribution and reproduction. In today's digital age, intellectual property rights have become increasingly important. With the rise of online content consumption and e-commerce, protecting digital assets has become essential. Artists, musicians, writers, and software developers can leverage copyrights to safeguard their digital creations and monetize them through various channels, such as streaming platforms, digital marketplaces, and licensing agreements. However, it's crucial to understand the legal aspects and processes involved in protecting and enforcing intellectual property rights. Consulting with intellectual property attorneys or experts can help navigate the complexities of registration, licensing, and enforcement. Furthermore, intellectual property rights can be transferred or sold, providing opportunities for strategic partnerships or outright sales to interested parties. This can unlock additional sources of income and potentially lead to significant financial gains. It's important to note that the value of intellectual property can fluctuate based on market demand, technological advancements, and changes in consumer preferences. Assessing the potential market value of your intellectual property, conducting market research, and understanding the competitive landscape can help you make informed decisions regarding its monetization and commercialization. In conclusion, intellectual property represents a valuable asset class that can provide ongoing income streams and competitive advantages. By protecting your unique ideas, inventions, or creative works through patents, trademarks, copyrights, and other forms of intellectual property rights, you can monetize your creations, safeguard your brand identity, and explore various licensing or partnership opportunities. However, it's essential to understand the legal processes involved and stay updated on market trends to maximize the financial benefits of your intellectual property assets. Number 5. Stocks and equities. Stocks and equities offer investors the opportunity to become shareholders in publicly traded companies. When you buy stocks, you become a partial owner of the company, which means you can benefit from its growth and profitability. There are several ways to approach stock investing. First, you can choose to invest in individual stocks. By conducting thorough research and analysis, you can identify companies with strong fundamentals, competitive advantages, and potential for future growth. Investing in individual stocks requires active monitoring and staying informed about market trends and company performance. Alternatively, you can opt for diversified investing through index funds or exchange-traded funds (ETFs). These funds pull money from multiple investors to invest in a diversified portfolio of stocks. By investing in index funds, you can gain exposure to a broad market index, such as the S&P 500, which represents a basket of top-performing companies. This approach allows you to benefit from the overall growth of the market and reduce the risk associated with investing in individual stocks. Dividends are another potential source of income from stock investments. Some companies distribute a portion of their profits to shareholders in the form of dividends. Dividend stocks can provide a regular stream of income, which can be especially attractive for income-oriented investors. It's important to note that investing in stocks carries certain risks. Stock prices can be volatile, and market fluctuations can impact your investment value. Additionally, individual company performance, industry trends, and macroeconomic factors can affect stock prices. It's crucial to diversify your stock portfolio and align it with your risk tolerance and investment goals. Staying informed and continually educating yourself about the stock market is vital for successful investing. Reading financial reports, following market news, and understanding valuation metrics can help you make informed investment decisions. It's also wise to consult with a financial advisor who can provide personalized guidance and help you navigate the complexities of stock investing. In conclusion, stocks and equities offer investors the opportunity to participate in the growth of companies and potentially earn dividends and capital gains. Whether you choose to invest in individual stocks or opt for diversified index funds, stock investing can be a powerful wealth-building tool. However, it's important to carefully assess risks, diversify your portfolio, and stay informed about market trends. By approaching stock investing with a long-term perspective and a well-thought-out strategy, you can harness the potential of the stock market to achieve your financial goals. Thank you for watching, and we hope you found this video helpful in your wealth-building journey. If you enjoyed this content, please like, share, and subscribe to our channel for more valuable insights. Until next time, take care and stay financially empowered.